HDFC Bank. It's not a big move on the stock. HDFC Bank, it's up 0.5%. But that's also helping on the sidelines for the second day in a row. Bhavin Shah, founder, portfolio manager at Sameeksha Capital, is with us on the show now. Bhavin, morning, and thank you very much for joining in. You've been a proponent of private sector banks, financials. They've been in your portfolio, particularly on HDFC Bank. Where do you stand, given the correction that we've seen in the month of January and February? Have you been buying the HDFC Bank when it's been declining?
So we have, bought it indirectly through sector ETF, where HDFC Bank is about, I think, more than a third of that index. Because, we like HDFC Bank, we also like other banks in that index, and it is an easier way to participate in that. I think the, obviously, HDFC Bank, everybody knows, valuation has become super attractive from a historical standpoint. I think the question continues to be there on the growth. So we don't want to be going there aggressively yet, but also don't want to be completely out of it. So that's how we are playing that. I think we like the whole private sector bank space, and I think that sector ETF gives us a very good exposure through that.
Okay, by the way, I just want to read out some commentary that is coming in from Mr. Uday Kotak. He's speaking at an industry event, and our colleague Yash is sending us the gist. He's made some important statements on the market. He's saying that we are nowhere near bubble territory at this stage. I think there are enough checks and balances. Well, that's Nazara, there's corporate news coming in, but the earlier flashes were from Mr. Uday Kotak's commentary. He's saying there may be a little froth. It could be a little bubbly, but it's not out of control. So not a bubble, maybe a little bubbly because of that little froth, but it's not out of control just yet. That's the word coming in from Mr. Uday Kotak. Bhavin, hi, great to have you on the show. So, I'm sure in your long stint in the capital markets, you've seen this tape play out before repeatedly. And I think it's very, very similar, right? Markets get excited, things happen, and then, correction sets in. What do you make of the mid-cap, small-cap correction that's underway? All the buzz around SME IPOs with the regulator now watching. And how long perhaps before all of it settles? Just from a standpoint, market standpoint, there's been this long chatter about going back to the large cap stocks, the large cap trade. Do you think it's time that will start? What are we looking at here?
So I think first on the regulator, I actually like to see regulators taking more action. I actually really like what RBI has done in the financial space. And I think, it helps fund managers and investors who actually pay attention to, the quality. And basically, last year or so, I think you could have bought anything, and, there was no appreciation for quality, so to speak. So I think that cleanup is, I think RBI is at the, and I hope that SEBI also, takes more action. I think we have seen some entities getting clean sheet in the recent past, and I'm not sure if that is healthy for the market. If we want to be one of the biggest markets in the world, and we want to be that whatever the large economy, I think we cannot have a banana republic kind of a stock market, where people can manipulate whatever stocks they feel like manipulating. So that needs to stop, and I think this action is very much required. The way I would differentiate this correction from some of the past corrections is that the fundamentals are, I think, much stronger for the economy, and as a result, I would, we haven't really, basically reduced significantly our exposure to the small cap, even though all the signs were there that there is, basically some bit of froth in many of the space, subspaces in the small cap. Now, I think there has been some value in large cap, and I think that's what maybe is how the market is differentiating. And the main thing is, though, it's a technical, liquidity in small and mid cap space in India is very thin. So, and anytime there is even a little bit of panic, you're going to see this kind of reaction, and it works both ways. Those small and mid caps rally also much more strongly, especially small cap. So I think this is, this is natural. One has to just pay attention to the portfolio, and if the stocks we are owning have the healthy fundamentals and the economy is very supportive, there is no need to panic, is what I would say.
Okay, Bhavin, so, fair enough. That's good advice. Let's come to the way you're approaching your portfolio right now. Just give us an overview in terms of top overweights. What are the areas that you're still liking? What are you avoiding? And of course, throw in a word on IT as well. I mean, in your earlier avatar, you've studied so many cycles, all of that. So I'm just wondering where you are on IT in your own portfolio right now.
I mean, we are, I won't say overweight because I think we actually don't look at sector weights closely. So I have no idea where I'm overweight or underweight by and large, but I can just say where our bigger bets are in which spaces. So I think we continue to like aviation name and all the leader. We like private banks, I mean, I think we're playing it through specific banks as well as I told you, bank, ETF. Some smaller private banks as well. We do like IT to some extent, and we do have some exposure to that space. We also added some fintech-oriented names, digital music-oriented names in the portfolio in the recent past, and so we like that space as well. So yeah, those are some of the areas that we like. We like to play I think there is a lot of focus on renewable energy, but natural gas continues to be a very important energy source for India. And so we also have exposure to that.
What about ITC? Do you get the sense that ITC may have just bottomed out now that the supply overhang is behind us? CLSA today upgraded the stock to a buy. Their target price is at 468. You've got Morgan Stanley, maintaining their bullish stance, overweight, target price 491. HSBC has upgraded it with a target price of 480. Do you see ITC getting back to 500? And is this an attractive level to enter ITC now?
So I haven't looked at it closely recently, but I do think that I mean we don't own it because of the fact that it's a cigarette. They sell cigarettes, and we avoid companies that directly harm humans. But yes, I think from a growth perspective and the way they are positioned, it's probably a good bet to have is what I would say.
Are you concerned that this regulatory action that we've seen, whether it's on cracking down on the SME IPO, the funding mechanism, some of the dubious operators, is this something which is going to go on and could hurt the market, particularly, the small and the mid-cap space? Are you a bit worried about continued action on this front?
I mean, yes, I think there is perhaps going to be more. I think there is going to be this is just started. So I think it is very possible that it can, the market can overshoot on the negative side. So it is very possible. I mean, I'm not saying I'm not concerned in the sense that yes, it's concerned from the sense that it will hurt the portfolio in the short term, but I'm not concerned in the sense in the long run if this actually results in the cleanup that is required. I think that is what I would say.
Okay. Bhavin, so just to wrap it up, I'm going back to some of the sectors that you like, private banks. You mentioned, some interesting aspects like digital music. I know you did not talk stocks, but Saregama was the one name that came to mind. But, anything else? Because these are very niche sort of categories in the small cap space where one has to tread with caution. And I'm sure you and your team have done a lot of homework on it. So anything else in the niche space?
So I think what is happening is that there was a period when pirated music was the king, right? People, but with the advent of digital music, YouTube and the other Savan and other online, digital music streaming channels and so on. I think the music producers are getting a fair share of their revenues, and in fact they are growing. Whoever has a decent collection, they are seeing very nice growth in that space. And I don't think we have sort of reached a saturation point in that journey. I think more people are consuming more and more music, digitally, and I think basically that directly helps these companies who own the content, and that's why we like that space.
Bhavin, thank you for joining in. We leave the conversation here for now. We'll get into a break. On the other side, we'll discuss commodities. Manisha Gupta joins in on the other side. Stay tuned.